Hi, this is Dean. We are doing an SPX update. We've taken full bets on a potential crash come in from this level, and it's been quite tricky recently. We do a quick roundup of different swings. We're long here, went a little bit into profit and came through. On the breaking of this, we were short here. We were out of that and long again. I think it was here. Can't remember what we did here, but we were short here and then switched to long and here. We've been predominantly long up through here, and now we are into the short zone, which is here. For entry signals here, we have a couple staples of trend trading. We've got the 161 extension of the bottom of the swing. When we drop to the 1 hour chart, you can see it's had a really interesting reaction there, possibly form a shooting star formation, 3 candle reversal. Need to be a strong downtrend in the next 30 minutes for that to happen though, because this one has to close under here. It looks quite unlikely at the moment, but anything can happen. It doesn't necessarily have to be that candle pattern for a reversal. We also have a 7-6 extension of the second swing. And sometimes this extends to the full swing as well, so you need to keep that in mind for spike tolerance. There is spike tolerance up to and including 3870, but it shouldn't go much higher than that. And if we are trading off the second swing, which happens quite a lot in Elliott wave formations, we will make a top here. This is where we've taken most of our bets. Let's jump out onto a large chart to look at different things that can happen. First things first, in terms of risk, I am always pretty skeptical until this area is hit. And it can jump up to there, it can spike down and jump up to there. But with this area not having hit, I feel that there might be a lot of stop losses on shorts above here. I feel if we spiked it under here, there'll definitely be a lot of shorts, stop losses on shorts there. And it's a really easy liquidity pool. Just spike it up there and then the real move happens. But with that being said, when that is happening, I tend to find that the short here would be easier. It would just go straight down and it would break the low. And at that point, everybody's rushing in because the short looks really, really easy. And you know, anybody who started shorting anywhere up here, it's been painless for them all the way down. And if you look at the small charts, that's not what's happened. The short has not been painless at all. It's been all these big, massive spike ups. So if it is dropping, it's been a very challenging short to position for, and a challenging short to position for lends itself more to the probability of the breakout being stronger. Strong breakouts happen about 1 in 4 times, so they aren't necessarily the thing to bet on all the time. But in the rare cases that they do happen, it tends to be coming off really tricky action before it. And I think this has probably kicked out a lot of the bears. And if we see a breaking of this, we're going to break the 220 fib. If we break the 220 fib, we are usually going to the 261 fib at least. And if we break the 261 fib, we are commonly going to the 320 and then full extension to the 423. And the crash would typically look something like this. Break, retest, move speeds up after breaking here. Sometimes we get a big bounce in this area. Quite likely we get a big bounce in this area, to be honest. So this is the first target area, 3,000 to 900. Then after the big bounce, capitulation to 423. That's the crash plan. As things stand, we will update if they change. Thank you for watching. That's all for this one.